Hello everybody. So this video was originally going to be about 5 stocks, but I've realized that ASTS, RDW, and Rocket Lab all fit very well in a space stocks video. So there will be a separate space stock video, and so I am only going to cover 2 stocks in this video that are classified differently, totally different sectors. One of them is GigaCloud Tech. It's a platform, a B2B platform that allows drop shippers to ship furniture, but also large, bulky items of all sorts. And I am going to cover TideWater. TideWater is an offshore boat company that helps with the servicing of offshore rigs and oil rigs and the oil industry, the energy industry in general. And I have selected these 2 stocks because many of you talk about them in the comment section, but then B, they're very cheap, especially GigaCloud Tech. And I must say, GigaCloud Tech will belong in another video that I may make on platform stocks, because this is a platform that is growing very fast and that is cheap, to say the least. Dare I say very cheap, because it's under 0.1. It's more expensive than, say, a HIMS, but it is very much down at the bottom of the cheapness. The EBITDA margin is very high for GigaCloud at a 14%. For a new company, that's very high. The gross margin is 27%. Now, don't forget, this is a platform, so perhaps a little low for a platform, but that is because they have physical operations, they have trucks for delivery, they have warehouses, so that's why that gross margin is a little lower than you would expect for a pure play platform. Nonetheless, the rule of 40 is excellent at a 54. Rule of 40 tells you is this a good buy, right? Rule of 40, when you beat that means your revenue growth and your margin exceed 40. And in the case of GigaCloud Tech, it is absolutely the case. So what do they do? Well, GigaCloud Tech, as a fundamental business model, it circumvents the reseller/retailer, and it allows customers, their customers, i.e. their buyers on that platform, to resell directly to the customer through drop shipping. So this is core to one of the modern ways that a lot of people do business on platforms like Amazon, like the Shopify's of the world on these platforms. Oftentimes, most sellers on these platforms, i.e. the buyers on a company like GigaCloud, the buyers who then resell it, most of the time they don't even see the merchandise. And you can see when you go on their website, this is a little bit of an option you have. So you can, when you buy the product that is dedicated for resale, this product is going to be resold by someone somewhere online on one of these platforms. They can either ship a bunch of these products directly to, say, Amazon, and that's the wholesale fulfillment. And then in that case, the company GigaCloud will ship the bulky goods directly to the warehouse, or they can just have the bulky goods stay with a supplier and ship them directly to the customer, and it doesn't go through the end of an intermediary, and then in that case, that's drop shipping. So it's really riding this internet wave of a lot of new entrepreneurs who get into the drop shipping business. I find that business quite interesting. Of course, this business has a lot of competition. There's a lot of competitors in that space, right? And you can probably think of, say, the Alibabas of the world, right? Or AliExpress. Many people use that. Actually, some people do drop shipping on eBay sometimes. Sometimes you'll buy something on eBay and you will see it comes from Amazon because someone is just arbitraging the difference between the price on Amazon and the price on eBay. So there's a lot of instances of competition. But GigaCloud differentiates itself because they specialize in bulky items, and namely it was mostly furniture up until recently, and now they've added over bulky items like auto parts, like a bumper or windshield or door. They've added more bulky items recently, but they initially were just in the furniture space. So because of that, it could also be a housing play, a housing rebound play, because furniture is obviously sold when interest rates drop. A lot of people may buy that. So that's another compelling aspect to it. The growth is outstanding, like I said, at 40%. You can see the customers of the platform, the buyers, right, and the buyers who resell on, who resell on, say, Amazon, right, or Instagram or whatever. Those buyers, the buyers to GigaCloud, they've been buying more and more, and you can see the growth has been steady and the growth has picked back up in 2024. Now, one of the final things I'll say I like about GigaCloud is kind of the way the stock has been behaving. If you're familiar with, say, a company like HIMS, if you're familiar with SPACs, with any SPACs, they do the IPO, then the stock drops a lot and it's being left for dead. And then investors start noticing, oh, wait a minute, that company might be a real deal. There's a few things going on. I guess we sold it off for nothing. And then you have a little bit of hype, and then the stock went back down a little bit. This chart is eerily similar to the chart of HIMS or to the chart of a lot of SPACs, if you look at it. And it doesn't really matter what it's trading at. It's going to take years for this company to really figure out how it should be priced. That's the same story as HIMS. These are small cap, volatile stocks, but eventually it will have a more stable pricing. Nonetheless, in the meantime, you get it for cheap. Like I said, there are no big companies that are this cheap, aside maybe from Chinese stocks. There are no large companies that are this cheap. The volatility is something that you have to pay in order to get a cheap stock, and this is definitely that company. So that company, I will analyze it again in the context of other platforms and compare it to other platforms and see how they fare. But I already know that they are much cheaper than a lot of other platforms that I've covered on the channel. Now, the second stock I want to cover, I've covered this company before, and it's TideWater. So you can see also a cheap company, although twice as expensive on the question, how much am I paying for that growth, right? EV over GP over revenue growth, how much am I paying for that growth? That company, TideWater, is twice as expensive as GigaCloud, but it's also somewhat understandable. It's more established, but the sector has historically been a sector that's been battered, which is the energy sector. A lot of people don't like to invest in the energy sector. Nonetheless, there is a specific macro play which makes this company interesting. This company, in my view, is much more of a real world asset type of play than it is a business growth type of play, because there is a cyclicality in the oil business. But really briefly, what does TideWater do? Well, they are the largest offshore support vessel operator in the world, right? I call it a boat, but I guess it's a vessel. And they have 213 of these vessels, and they service most of the major oil areas of the world, offshore regions of the world. So the Gulf, of course, but also Latin America, some of Africa, some of the Middle East, some of Asia, and some of Northern Europe. So that's what they can do with their fleet. They rent their services to these offshore operators who mostly drill oil and gas, mostly oil. And why do I say it's an asset play? Well, let's go through this a little bit. Why is the revenue up so much for a company like TideWater? Well, it's because the rates, if you look at the rates for these boats, those rates have been going up steadily since 2018, and they keep rising, and they have multiple types of rates here. You can see it's across the board. The rates are rising. And why are the rates for these servicing boats, of oil station servicing boats, why are they rising? Well, they're rising for two factors, three really. So one of them is there's fewer and fewer companies are investing in these boats. By the way, let me just show you this is boats like this. This is what those boats look like, right? You can take a look. This is this type of boat right here. What happens here is a lot of companies have been retiring these ships, and there hasn't been a lot of order for new ships in recent years. So the supply of these oil servicing ships is going down, and because of the supply is going down, of course, the prices are going up. And there is another factor is the debt situation right now and the financing, the interest rates right now across the world are making those order books for those ships go down even more because they're usually financed. So it's kind of a double whammy for that sector. And TideWater is poised to benefit here because they have the most ships. Their ships are already built, and they are slowly becoming one of the major games in town because their ships are operating in a sector where there is very, very short supply, and it may take a few years for more ships to be built and for more ships to come online, and then and only then will the prices come down, and that's a stock that one could be interested in being out of. I am not invested in either of these companies, even though I have been monitoring TideWater for a while. The cyclical nature of it has kept me out of it. Looking at these numbers between TideWater and GigaCloud, I can tell you I'm much more compelled by GigaCloud. It's a sector that I like most, but I need to look at oil right now as interest rates drop. I think it will be an interesting story. So stay tuned. I'll analyze these stocks more in the future. Stay tuned for my my network/platform video. Stay tuned also for my video on space stocks and comparing the space stocks. I know a lot of channel followers really like Rocket Lab, so I'll cover that one as well. So this is not investment advice. This is just entertainment. I hope you were entertained. Appreciate the likes. Appreciate the subscribes. Thank you for watching and have a wonderful day.